So I'm here to talk about mortgages, mainly buy-to-let mortgages. And basically we're a local firm. I say we're local, we're national, we cover the whole of the UK, but we're based in Norwich, just near the bus station. We typically don't charge broker fees, we don't have any lender panels, and we offer independent mortgage advice. So we're a small firm, it's my company. I say small firm, there's about 30 people, so we're getting a bit bigger. But we don't work for lenders, we work for you guys. So I'll get your way. So today I'm going to talk about the property market and valuations and mortgage lenders and interest rates. So, valuations. So, Rightmove house price index for March this year showed that nationally house prices went up, or the asking price for house prices went up 1.5% monthly, and that's now sitting at an annual increase of 0.9%. So that's good news. East of England, keep it local, that went up 1.6, so slightly higher than the average, but that's still meaning that East of England is sitting at just below where it's a loss. But I suspect next month that'll be in the green as well, so it's been increasing over the last couple of months. And it's fair to remember that last year, Rightmove predicted there'd be a reduction of 2% house price index, and it only fell by 1%, and this year they predicted a 1% decrease. Who knows where it's going to end? Every lender and everyone's got their opinion about what's going to happen with the house prices. So, opportunities. We've got motivated sellers. Houses are staying on the books for longer, so you can potentially negotiate a better price as properties are not selling. Currently, there's a couple of lenders doing 85% bridging finance, so if you don't quite have a lot of money, but you want to do up the properties, you can put down as little as 15% deposit, increase the property value, and remortgage it within a couple of months to get your money back out. Splitting title, buying somewhere with a big bit of land, potentially split off the title and potentially build something on the spare land. You've got Leasehold Reform Act. And this is going to make it easier if you've got a place with a small lease remaining. You can then get the lease extended at a reasonable price. Currently, there's a lender, so currently he's been a lender for ages, that has a minimum of 35 years remaining on the lease. That's a high street lender. So even if it's got a 40-year lease, you can still get a high street lender's mortgage. And that'll put a lot of buyers off. So the little nuggets you can look for there. Okay, so swap rates. Swap rate is how lenders price fixed rate mortgages. And if we have a look at 2-year swap rates, as from this morning, it was 4.4%. Now, that's the same as last month, and that actually went down from the previous month. So it's gone down slightly, but it hasn't changed in the last month. So kind of good news, it's stabilising the market. 5-year fixed rate, it's exactly the same things happen. So it did come down last month, and it hasn't gone down this month at all. So it's a little bit more confidence, and I think everyone expected inflation to fall next month with the energy prices index going down. So that'd be helpful. If you've got a remortgage and in the next 6 months, you can look at getting a price now. Now, if rates go down in 3 months' time, potentially you can then get a cheaper rate going forward. So it's something to be aware of. EPC ratings. Currently, all let property has to have an E or plus. And the aim for the government that they kick the can down the road, the aim is to have all let properties up to an A or C. And there's no, it was going to be 2025, but they've pushed that on now, and there's no set time when they want that. But wait until the government comes in. Who knows when they're going to want all the properties to be an A or C. If you do have a property between an A or C, you can get a green mortgage, so you can be slightly cheaper on the interest rate. So there are some incentives to get a good EPC rating on your properties. Okay, buy-to-let mortgage rates. So single let in your own name at 75%, and I do all these apples with apples. Do everything at 75% loan to value, because that's the majority of the advice that we give and people take. So 75% loan to value, single in your own name or limited company. Same as last month for single let properties. Limited company, it's cheaper, but it's in blue because that's an exclusive lender that only got 12 brokers in the country are distributing their funds with. So we had that product last month, but I didn't put it on the board because it's not on the usual source systems because they don't want loads of business on it. So that's the cheapest limited company at the moment, and you can only get it through a dozen brokers. We're one of 4 brokers that you get free valuations, so it's very exclusive. HMOs, that hasn't changed. The small HMOs, Birmingham Mid-Shaft, still the same price as it was a month ago, 4.34, maximum of 5 people in one tenancy, good for student lets. If it's single lets or more than 5, then you have to go on a larger one, and that's 4.99 with a 3% lender's fee. Bridging finance, non-regulated bridging finance. So if you're going to buy it up to let out or buy it up to do it up to sell, then you look at 0.79 with 2% fee. Regulated, so if you're going to buy up to live in it, then it's a little bit higher at 0.84% with a 2% fee. The more works you're going to do to the property, if you're going to extend it, then you're not going to get the cheaper rates. It will be price dependent. So more works, you will pay a slightly higher rate. Brokers versus direct. So for brokers, you've got more products available. We've got experience and relationship with the lenders. We give you advice, we work for you, we don't work for the lender. And us at Vincent Burch typically don't charge a broker fee as well. And a new slide this month, so potentially everyone that's seen me for the last 2, 3, 4 years, whatever, that's been a similar slideshow. But last month, on our website, we've got a new bridging and development calculator. So if you want to play around with projects, whether it's finance it for bridging finance or development finance, we've got over 100 lenders on our website. Now, if you want to look at this at all, go on our website under specialist mortgages. You can go to bridging, then there's a green button that says search bridging finance, and you can put in a project, and it bring up all the various lenders with their finance options. Equally, if you want to do a development finance, go to a development page, search development finance, and again, it bring up all the lenders that fund that project. It'll also exclude the lenders that don't want to fund the project, so it's a good way to see who can potentially offer you a good deal. There's over 100 lenders on there, as I say, included a crowd property who support these guys at PIN. There's rates from 0.55. The bridging rates I had earlier were higher because they're 75% loan to value. The 0.55 and 0.45 reg for lower loan to value mortgages. But on these rates, you still can get fast track and AVMs, automatic valuation, so you don't need to go for full valuation. But like I always mentioned, look, this tool on our website, it's only got 100 lenders. I've got more lenders. And there might be lenders on there like that they typically do, say, 180-day valuation on the properties. Go there as a guide, but please speak to us as we've got a relationship with the lenders, and we know how some of them are good and why some of them are not so good. So, no broker fee. We've got 15 advisors now. We've got to change that. We're locally based. Please, if you've got any questions, come to me afterwards.